What is our understanding at a time, of course, when negotiations between the US and China continue? We have that 90-day extension in terms of what this agreement could look like if investments in the US from China are not part of that.
There is so many touch points. There are so many touch points, I should say, when it comes to that relationship. And if you can't talk about actual investment, which has been a consistent concern, not just with China, but you mentioned Japan as well. The Nippon Steel deal has really brought into question how much foreign direct investment you actually want at the end of the day, which is ironic given it's such a key pillar of Donald Trump's policy, bringing in that foreign investment to kind of offset some of the expenditures when it comes to things that the government would need to spend in terms of the country. It's one of the components of U.S. GDP. But the other key touch points are things like rare earths, it's IP, it's technology, but it's also a manufacturing and supply chain story that extends not into China, just into China, but into Vietnam, the Philippines, Malaysia, et cetera, that ultimately comes back to the end consumer. And the point that Scott Bessent is trying to make here is that there's already so much interdependence between the two. Do we need to include foreign direct investment on top of that? Anecdotally, for example, when the Chinese invested in the Empire State Building, just as a hypothetical, that is where there was a lot of concern about the fact that some of these massive American projects are foreign owned. And that was something that domestically caused quite a bit of concern. This was years ago, of course, but it's that kind of sentiment that's starting to come back.
More broadly, in terms of the revenue increase coming through from tariffs, are we any clearer to a point where that is starting to offset concerns about the U.S. deficit? Is it making a mark as we see those revenues tick up year on year pretty substantially?
They're enormous. I mean, the last 3 months, just from the tariff collected since Liberation Day, even as these kind of negotiations are ongoing, are a pretty decent chunk of change. We're talking about billions of dollars being collected by the IRS, but billions doesn't solve a trillion-dollar problem or a multi-trillion-dollar problem. And that's really where the concern is. His argument, or Donald Trump's argument, is simply that the math will add up, that the tariff revenue plus the tax cuts will somehow offset the deficit. But we've talked to economists, to market participants throughout programming who suddenly said, well, the math doesn't add up because you're not actually taking into account some of the other pieces as well. That being said, it's the interest rate payments that are ultimately causing the kind of snowball effect in the deficit. And that's where those kind of essentially Doge cuts were pointed at to kind of get rid of the underlying thing that is ultimately spending the money and then be able to bring the deficit down. We are making a dent, but it's a tiny dent.